I'm delighted to welcome to the stage Xandra Weinbeck, Senior Business Development Manager at Invest NL, and her panelists.
Thank you, Paul. And it sounds really appealing, a cold beer. That's good. Keep that in mind. And also, thanks, Stor, for staying here with us. And I'm very privileged because I have really great people on stage with a lot of entrepreneurial experience. And I will introduce you, and then we go right into the funding problems. Not too negative, also half full. Okay, I will start with Fredric Petit. He has a lot of entrepreneurial experience, but also working for Emerald. And he was also in the beginning of the European standards of bio-based products, so really at the beginning. And he has a lot of corporate experience, innovation, and he was also CEO of Fibers. We have Kirsten. Kirsten is was CTO and founder of DAP, and also a CTO and founder of CEO and founder of Chaincraft. And now she's program manager at the National Growth Fund, Biobased Circular. And Michael is before he was joining ECBF, he was investment manager at BSAF, and a lot of experience in heavy fundraising as an investment manager and also merger and acquisition. So the first question that I have for Fredric concerning the biodevelopment entrepreneurs: are there entrepreneurs in the room? Please raise your hand. So they really need funding. And when an entrepreneur is on a quest for funding, I think it's very difficult because you're looking at different. You start with visiting venture websites, looking at their portfolio, Fredric, could you give an idea? Why did you invest in these companies concerning your portfolio? And then I will ask Michael.
Yeah, so the glass is half full. So we did invest in a few companies. The glass is also half empty because we also decided not to invest in many more startups. As Emerald, we provide startups, hopefully with capital, but also within a network that we have. I mean, our investors are the corporates. We have more than 50 global corporates, which could be off-takers, suppliers, manufacturing partners of the startups. And we have been doing this for 25 years. So when we invest, we also like to have an active role and really support the startup to realize its full potential. If you zoom in, especially on the topic of bio-based, I mean, that has been discussed extensively today, there is still a high need, but we also learned that it's also a very difficult journey. And why is it difficult? I mean, Michael Kara showed the different graphs on the drop-in and the almost drop-ins and the alternatives. I mean, on the drop-ins, you only have a supply chain to manage. And the demand chain is kind of given because you develop a singular product. If you have an alternative material, you have the supply chain to manage and you have the demand chain to manage. So it's a double task. So what we look at VCs, and you mentioned I've been running a startup myself, and I always got angry when I was asked the question, what is your exit strategy? I said, what the hell? I'm working on an entry strategy. Why are you asking me about an exit strategy? But that's kind of also I mean, there are different funding opportunities, but when you talk to VCs, venture capitals, then they always have some kind of a time frame that within whatever, depending on the VC, between 4 to 7 years, they want to see an exit. Because either they want to launch a new fund or they want to recycle the capital for new startups. So that's difficult because many startups need longer, and they need not just tens of millions, but at a certain point they need hundreds of millions. So later on, I can give an example of why we invested. So we like to know a lot about the startups present there. We want to connect them to the corporates because sometimes for a startup it's more important to get 1 million in revenue than 1 million of equity. So we want to provide them also with the right development partners. But it's related to how unique is your technology, how well can you protect it, what is your business model, is it build and operate, or can you work with contract manufacturers, because that will determine a lot the timelines. And the last thing I want to mention there, because there is a huge difference as a startup when you develop a new product. You have scientists, you have biologists, you have fermentation people. That's how you develop the product. But if you scale, you need a completely different competence set, because then you need operational people, electrical engineers and mechanical engineers, which basically ask a different profile of the startup. So if you can find ways to partner, that will definitely help your time to market and your time to volume and your time to venture capital.
Yeah. And Michael, can you comment on that?
Yeah, I think Fredric already addressed a lot of the points that we are also looking at. When you look at our website, you will find that we invest, that there's a portfolio, so that's the good news. When you would know the number of companies that we look at each year, you would probably get depressions. So it's a highly selective process, and only a few make it. And is there, a justification why this company and why not this company? There isn't. So the only thing that you can do is really to be well prepared, to have thought through your business plan. When you talk to Emerald and when you talk to us, you talk to normally investors that have expertise in the sector, so that understand the sector. So we may ask different questions than a generalist asks. So we don't need to be presented with a story of the hockey stick and things like this. So we ask more, okay, what is your business model? Right? How do you make this? What is the amount of money that you need in follow-on rounds? Right? Do you, especially when you want to operate, maybe that's a good idea if you get funding, right? So it needs to be thought through. You need to have a sound value proposition. And we have seen from Michael Kauer's presentation and others how difficult it is to bring bio-based products to the market. Michael, you mentioned Freddy, that you need to create a market. I think that's really true. So where's the market opportunity? Where's the market created? What is the market driver? Right? How you enter this? Many cases when we look at bio-based materials and bio-based chemicals, they are benchmarked against fossil incumbents. I think that's not fair, but this is just the way it is, right? So we have to find a way how to, bring these products into the market, how to come from specialty applications to, higher volume applications, bring down costs and open up more markets. So what is the strategy here? What's the plan here? And finally, it's also for us about really the sustainability aspects. Not all the things that are bio-based are super sustainable, right? So we look, for instance, for greenhouse gas emissions reductions or savings or avoidance, whatever you would call it. And that's another dimension from sustainability perspective, because we are sustainability-oriented investors. That's what we do. So there's it's a stretch, but it's not impossible because there's a portfolio.
Yeah. Kirsten, I see you nodding. So
yeah. Well, realize if you want to have venture capital in, they have a timeline of maybe 5-7 years. So it depends on the fund, but realize that you also have other ways of getting a little bit further and making your business more attractive to finance. Yeah. So the Dutch government growth fund, Biobased Circular, that I'm representing here, offers opportunity for non-dilutive funding, but also bringing you together with the market and setting up whole value chains, because it's not, you cannot do it on your own. You really have to collaborate and develop the markets, but also think of recycling technologies, because it's not only focused on virgin production.
Yeah,
you have to.
Yeah, recycling technologies. You mean the material or the development of innovation? That's certain.
Yeah, if you set up a new business, you also need to include basically the recycling perspective, or maybe even circular by design, and getting the recycled material back and blend it and still have the right quality. It's not the one company, but it is a whole value circle, not value chain. We call it value circle to have that in mind and focus on what you can do, but attract people and companies that can do other parts of that value chain.
Yeah. Also, some people say, okay, there is no funding gap in financing the bioeconomy because there are a lot of flavors you can choose from. Is that correct in your opinion?
if it's correct to.
Yeah, is that correct? Is there funding enough for the bioeconomy?
Well, I think no. It's clearly from also colleagues here on the stage is that not a lot of companies get funding. So it's a tough competition. There's not a lot of money available. Interest going up. Chemical industry is still waiting to make capital decisions or setting up sales offtake agreements. So it's really hold on, hang in there. That times will come where, for example, blending opportunities or obligations to mix with virgin bio are obligated. So I hope you'll stay alive and and be there at the right time when things kick off.
Yeah.
So I think no, there's not a lot of finance.
And are there? You mentioned blended. You mentioned also keep the value chain alive. What can entrepreneurs do more to keep that?
There's no one recipe, of course. I heard attract part of your value chain and also the financing step. You could think of risk sharing, revenue sharing, new business models, how to finance your chain, and focus on market applications.
Yeah,
because if there's a market pool, you have a better investment case.
Yeah.
Well, maybe.
And if you look at the market pool, and you also mentioned, Fredric, that they make use of OEMs or shared facilities. Is that something that investment funds are advising entrepreneurs to do, or is it more their choice to make that?
We definitely advise in two ways. So in the investment process, we do the due diligence. We see things we like, we see things we don't like, and that's fair. I mean, there is no startup without what we call hairs. There is always hairs in the deal that we need to that we need to address. And sometimes we have the open discussion. They say, hey, this is what we like, this is what we like, this is what we like, this is what we not like, and that could be that the build and operate model.
Yeah.
That's something. You think you have a great technology, you have a great team. There's a great market potential for your product, but your build and operate model that will require hundreds of millions and 5 years. We don't like.
Yeah.
So if this is what you as a startup want to do, sorry, but then we're not going to invest. And there is examples, that there's a specific company where both ECBF and Emerald are co-invested. That ultimately changed. They said they went to a co-manufacturer model. And then we said, okay, you're much more CapEx light, and your time to market is much shorter. Of course, there is a price premium, because you have to pay the contract manufacturer some margin, but that's compensating for the flexibility that you have. Yeah. So that's in the due diligence process. And once we are invested, we take an active role on the often, a little bit depending on the ticket size, as a board director. And then we work together with the management team and with the other board directors to really support the team and say, okay, I mean, licensing sounds easy, but it's extremely difficult. But we have seen so many startups working on licensing deals, so we have some insights on how to do this. So both in the due diligence process and once we have invested, we deeply support the startups with our opinion and what we believe is the right direction.
Yeah. And Michael, do you also have the same attitude towards the entrepreneurs?
Yes, for sure. I think what sometimes is perceived wrongly is that we are not in the same boat, but entrepreneurs and investors are in the same boat, and we have a vested interest to make the companies fly. And that means we, like what you mentioned in your first statement, is that we provide access to industry partners through our networks, that we have sometimes experts for special topics that can support. So for us, it's all about de-risking this thing, right? There's a huge list of risks that you have in these companies, and you take out one risk after the other. This is the way to think about it. And then by this, you create value, because you basically have a lower discount factor in the equation. So this is what we are doing, and it's always a cooperative approach, also among the investors, right? Fredric just a couple of seconds ago phrased it, there's competition. Yes, there's competition among the companies for investors, but the investors, we work in syndicates because there are not too many expert investors in this area around, especially when you look into the bio-based materials and bio-based chemical sector. It may be different for ag and food tech. There we see also a lot of generalist investors competing with these experts investors. But we rarely see the generalists in these highly specialized bio-based chemicals and materials topics. Because it's engineering, it's B2B. B2B is also a big challenge for all of us, I think, because you are working through a value chain, right? You are many times with your products and technology upstream in the value chain. So you sell to a customer. This customer needs to qualify, needs to test it, takes months, sometimes years. And then this customer has another customer. So it's very important to understand the value chains. And this is what we as investors see very often. So we have sometimes a very good understanding of the value chains, and sometimes also access to the individual points in the value chain where we can add value. So I think this is how we do it, or try to do it. Sometimes we also fail. We are not perfect.
Yeah. I think also that when you're in the growth fund, this is also a network that you're coming in when you're joining. Or
yes, it is, and I understand. And additionally. If you go for a business model that is capital light, it's very attractive. And I heard from somebody who's also sitting in the room, unless you run out of space, right? I mean, if there's no space available, then this business model is pretty nasty because you cannot manufacture. So I think this growth fund is also needed in order to make infrastructure available for companies to test and try out and scale up.
Yeah. So we talked about our title is half full and half empty. Glass is half empty and half full. Can you give a good advice, each of you, 1 minute max, to give advice to entrepreneurs for the landscape funding half full?
Yeah. So the first advice I would give entrepreneurs that are raising capital is to read the book Venture Deals, Be Smarter Than Your Lawyer. I wish I had read that book when I was a CEO of a company raising capital, because then you look way more into the heads of the investors and how they look at you, and you definitely get more smarter. On the other topic, also take time to really find out what is venture capital, what is private equity, what is the European Investment Bank doing, what's InvestNL doing, what are the regional development agencies in the Netherlands are doing, what's the Biobased Circular Fund. I mean, we have all websites, so take your time, but also talk to your fellow CEOs. So this is not only to find funding, but also to talk to your fellow CEOs, to see, okay, how did you manage? What is your experience? How did you? And often it's a combination. When you have a commitment from one, then it's to Microsponge that it's a little bit de-risked. So then somebody else will also come in. So leverage these kind of events, not only to talk to investors, but also to your co-founder CEOs, especially when they have been successful raising capital, to get their lessons.
And Kirsten?
I would advise you to unite on some and bind forces on some of the topics like market development, regulation, because you can look at certain, and there might be competition for funding from one of these guys or from our fund, but you could also say if we combine forces, the market will be faster ready for our product and we both can supply, because if they're ready for your product, scale up very, very quickly, because then time is against you. You cannot scale quick enough. So,
yeah. And Michael?
I could not agree more. I think most of it has been said. So be prepared. I think that's the message. Yeah. Be prepared, and it also goes a little into building a team. Right at one point, when we like the technology, we like the company as such, maybe also the business model. We still need a team that executes on this. And this is a very strong factor when it comes to success of the company. So we look into the team, can it execute on this? Who has certain knowledge and experience, even track record, to get the thing up and running and execute? And you know, not everybody knows everything. I think that's simply not there. So you need to find people with the right expertise that can support you. So along the way, build a network of people that could really add value to what you're doing, either by having them as advisors or by making them part of the team. I think that's really important.
Yeah.
But then still you need to be prepared.
Yeah. Thank you. Yeah, we have room for questions from the audience. Please. Yeah, hope so.
I want to respond to the statement that there is not enough capital available. It's perhaps more an observation. We focus very much VC money on difficult biotech, difficult molecules, lots of IP, lots of lab. There is very little by way of scale. There seems to be little focus on scale. And I think Michael Caruso already gave the answer. The only way to get a new technology at scale is by generating demand. And governments are the only parties who can really secure demand when something, like biotech, is fundamentally more expensive than fossil. And in my personal view, always will be. So it has to be the government or the governments who give those blending mandates. And I think ethanol is a fantastic example. 100 million tons of ethanol is produced, unbelievable amount. And it lasts 1 week, and then it's converted back into CO2 because we burn it in a car. If we would use that resource as chemical feedstock, we would make furniture and clothes and other materials, and it would last a year or maybe even 15 years. So I think it's also very much a top-down mindset that is lacking, and that will make, by the way, capital available from the incumbents rather than from the VCs. Mm-hmm. Perhaps my question is, any comments?
That's absolutely correct. I mean, that's also about de-risking. I mean, if there's long-term clarity about the direction of with clear government guidelines, that's de-risked. If it's changing every year, I mean, for the startup it's impossible, but also for the investor it's impossible. So then that specific risk is not tackled yet. So I'm fully with you.
And preferably EU-wide, not each country different legislation, because that doesn't work.
No. Yeah. Harmonization. More questions from the audience? No? Okay. Okay. I would like to thank my panelists and have a nice drink.
Thank you. Thank you.
The glass is half full.
Oh, glass half full, indeed. And thank you.